Listen, we've seen real estate skyrocket, but 2024 is kind of off to a slow start, and we're almost halfway through the year, and it begs the question, is it finally time to buy a home? Over the past year or so, a lot of people have been talking about how tough it is to buy a home. And while there's no arguing affordability is still tight, there are signs that it's starting to get a little bit better. Redfin senior economist said that rates have come down from their peak and are expected to fall again by the end of the year, which should make home buying a little more affordable and incentivize buyers to come off the sidelines. Here's a look at the latest data for the three biggest factors that affect home affordability. Number one, mortgage rates. Mortgage rates have been volatile this year, bouncing around in the upper 6% to low 7% range. That's still quite a bit higher than they were a couple years ago, but there is a sliver of good news. Despite the recent volatility, rates are still lower than they were last fall when they reached nearly 8%. And on top of that, most experts still think that they're going to come down over the course of the year. Let me give you a quick example of what this means. You've got a house here that you and the family want to buy for $350,000, and let's just say that rates are sitting right at 7%. What's your mortgage payment going to be? But then you say, okay, I'm on the sidelines because I'm wondering what happens when rates come down. And a lot of the experts agree that this year alone, rates could come down to, for example, 5.5%. So if I've got this $350,000 home, but now I'm getting a mortgage at 5.5%, what does it mean for my payment? Well, now my payment is $1,987. So that really begs the question, if rates are going to come down 1.5%, is this going to stay a $350,000 house? Not likely. The second big factor in affordability is home prices. Most experts agree that the prices are going to keep going up this year, but at more of a normal pace. That is not what happened in 2020, 2021. During that entire pandemic, we saw those prices go up abnormally. So let's take a look at what normal actually could look like. And you might be wondering, well, what is normal? Well, if we take a look at the last 65 years outside of pandemic, we've seen that nationwide homes increase average 4.65% every year, not 10%, 15%, or 20%. The following graph shows the latest 2024 home price forecast from 7 different organizations. Starting on the left with the green bar, we've got Goldman Sachs, and they're basically projecting, home prices nationwide are going to go up 5%. Now, the blue line on the left basically says the average of these 7 large organizations, 3.2%, which, if you take a look at the national average of 4.65%, is actually lower than what we have seen on average year over year for 65 years. By the way, this graph also doesn't mean that real estate prices are going to fall. It just means that they're now rising at a slower pace. And the third thing affecting home affordability, wages. Hourly wages rose 0.6% in January from the previous month and up to 4.5% from the year earlier, basically outpacing inflation, which is a good thing. Wages have been outpacing inflation since last May. But for the 2 years before that, the situation was reversed. In fact, real wages for a typical worker stand at about the level expected if there had been no pandemic or recession in early 2020, and if they had kept growing at the same rate as the prior years. Bottom line, if you stack these factors up, you'll see mortgage rates are still projected to come down a bit later this year. Home prices are going up at a more moderate pace, and wages are growing quicker than normal. Those trends are a good sign for your ability to afford a home. Bottom line, now might actually be the perfect time for you to jump in the game. And again, as a subscriber on my channel, we're not just talking about you buying a home for your family unless you're house hacking. We're actually talking about building a portfolio of real estate, because a lot of the things out there in the marketplace are affecting personal home ownership, but they have nothing to do with actually building an investment grade portfolio where you can potentially earn 25 or 35% a year on your money compared to 401ks and IRAs, making the difference of millions of dollars at retirement.
Make me believe it! Yes, yes, yes!
If you want to know what I would do to get to $1 million as quickly as possible, click the link below, put your information in, let me reach out to you. Wait, you're telling me that if I want to invest in real estate, that none of this stuff we've been talking about really actually matters? That's more for just affordability with my own home for me and my family? Yeah, like I'm buying more investment grade real estate right now than ever before. And if you didn't know that you could do that, you should probably look into getting like the ultimate guide on how to invest in real estate. And it just so happens that I actually created the ultimate guide, and it's right here. Click this video. Let me get you started right now.